You could look at some of those charts, particularly anything in retail sales, and say that's a V-shaped recovery. I don't need more stimulus.
Well, I think you got to look at a couple things. First, people are able to buy things either online or from stores, and they have the wherewithal to do that, and they're going out and buying. But I do think that when we think about where the jobs are in the economy, it's still in the services sector that still is very, very weak. In bars and restaurants, we're down in terms of the data. So we still have a very, very unbalanced recovery for the United States, and actually this is true for around the world. And until we get more balance in here, we really can't say that we're out of the woods, because balance is really important when we think about prospects for sustained growth going forward.
Let's talk about that sustained growth and the kind of growth that we're going to have, Catherine. I want to take you to Boston. Mr. Rosengren from the Fed speaking right now, talking about policy support, setting the economy up for a much stronger second half. How much stronger?
Well, I think the U.S. economy really is, if the fiscal policies come through anywhere near the size that we're talking about, the second half of the year is really going to be dramatic for the United States. But, United States is still only part of the global economy, and especially to the extent that we see a lot of spending in the form of goods as opposed to services, there's a lot of spillover to the global economy through the trade channel. And so I think we're going to be surprised when we see some of the trade data coming in, and it's going to make the trade deficit look larger for the U.S., and that's going to be a negative when we look at some of the GDP numbers going on in the second half.
So are we justified at yields at 1.28, 1.33 on the 10-year?
Well, they've been, somewhat subdued for an extended period of time, and to expect some increase coming from both the demand side, the real side underpinnings of the economy, that makes sense. The inflation, there is going to be more inflation this year than there was last year. Nothing that's out of the ordinary, nothing that's should be a scary inflation. We're not seeing anything even above 2% sustained for the year. So, the other factor, I think, that on the 10-year that we have to remember is there's a lot of foreign demand for U.S. securities, and the more the 10-year looks attractive, the more those foreigners want to buy it. And so that is a sort of a natural cap on how high the 10-year can go.